I have sold personally 5% on the floor. I have bought 30, 32, 35%, in recent months. I think August in my entire career, we have seen probably the widest ranges of volatility, sharpest spikes of volatility that this business has ever seen. Myself and anybody else that's trading has not bared witness to these levels of volatility. And although they might have calmed down, I do think that they are probably here to stay on the upper ranges of these levels of volatility. And again, that is because of these contracts that we have to trade against. So, volatility is what the options business is all about. Okay, if you're long it and things are moving around, you're in great shape. If you're short it and things are moving around, you really got to, weave and bob to make it work for you. I'm not of the camp that speculators drive prices, okay, because the entire investment industry, whether it's an equity, or whether it's a commodity or a bond, is based on speculation, being if I think it's going up, I'm going to buy it. If I think it's going down, I'm going to sell it, etc. and so forth. So that, that school of thought lays true with everything that's traded. They focus on, commodities, energies, precious metals, wheats, grains, etc. and so forth, because they might have a tendency to be a little bit more volatile than an equity. But speculation is speculation, no matter where it's exercised. There are ways that, customers that are trading large accounts can circumvent these things. They can open up more accounts. Is it going to be strike price or month oriented? That remains to be seen exactly how they're going to regulate it. I think right now a lot of people are looking towards Europe. That's been in the news for quite a long time. The U.S. economy has taken a back step, and the European economy has been, in the news on a regular basis. Greece, Italy, you're going to have Spain down the pipe, possibly Portugal, and each one respectively has much more sizable GDPs than Greece has. So their issues are going to be much greater. The bonds that are being issued by Italy, the bonds that were issued by Greece, are they going to be able to pay it back? What happens if they don't pay it back? What happens to the Eurozone? How much can the ECB actually afford to fund? Okay, from my standpoint, US is doing it, Eurozone has to do it. They have to print in order to survive. If they don't continue to, there's going to be some issues down the road. No, they seem to be, separate all unto themselves. China has already told Europe, more or less, you guys are on your own. Okay, they don't want to, falter, regardless of the fact that these bond issuance are pretty attractive. 6% is 6%. If you can't pay it back, you can't pay it back. That's the whole issue. China, and as far as gold is concerned, China and India have still been buying, gold on a regular basis. If you remember back in early summer, June, July, central banks were very much responsible for that first leg up over $1,500 because of their purchases of physical gold. Why? Because they realized that the world's paper doesn't have much behind it. Okay, Italy, second largest holder of physical gold, is more or less holding on to their gold, for that same fear. Okay, if they're forced to, if their hand is forced and they have to liquidate some, then, we'll have to see what happens, down the road if that is the case. Mind you, we are still at $1,700, okay? Back in July, we were a $1,500 commodity, okay? So we're $200 higher. We're more or less trapped in that range, 1923 from September 6th, to date, 1,700. So we're right now pretty much in the middle of that $400 range.